Good morning, traders. This will be a very quick update. As we are aware, we are trying to turn $10 into $10,000 using sound fundamental and technical analysis. And so it's more about just giving you trade alerts as to when to buy, when to sell, take profit, and all that. That's just a small part of it. I'm a firm believer that if you do not have the correct trading techniques, you can get the trade directions correct every, about 70% of the time, but you will still lose money if your position sizing is incorrect or anything like that. So I'm making more videos than usual, just to make sure that we instill the correct habits. So as we know from yesterday, we had a little bit of a sell-off in Bitcoin. We were expecting this, and we can just quickly go through just a quick recap. As you know, we worked our way up from these levels down here. We created this descending resistance line that was copied from the descending support line of this channel. However, it coincided at these levels, about 117,200, with this horizontal line, which seems to be quite strong. You have these wicks that bounce through this support, and over here, bounced over here, and then once again over here. So you have a situation where when it got to the support at about 117, we had these wicks that went up, but it always closed underneath, right? So we can see these as false breakouts, or just trying to tag that descending resistance. We then had a little bit of a sell-off into yesterday, and it went all the way down to the bottom of the channel that we created on this side, as well as intersecting with the support at 11220, where we took profit and we switched to a long position. Now, that being said, you can see here, if you look at the top, before we had a sell-off over the weekend, end of last week, you had these wicks that closed below. The exact same thing is happening right now. We have these wicks that went down to tag this rising support, and tag these the support where over there it was resistance. But if we invert the scale, it's the same. It looks the same right there. Down, tag the ascending support, up we go, close above the support, right? So, or the horizontal support. So let's flip it back to the correct one. We are now long. As we mentioned yesterday as well, and throughout the videos, when we took a short position here and we went down, when we switched that to a long position, we obviously took profit around about 112,200. We then entered our long position at 1118 over there, but for the same size that we were short. This means that if we went through or broke through the support, we would be losing money at the same rate that we made it. If we doubled up on our position, even though we had doubled or tripled our account, we would be losing money at twice the rate. Now, we want to avoid that. What we do is we got into our long position, and then we eased into our build-up position back up. I try to average in to keep my average below this green line, but as you can see, it came down, tagged here. I think I got my my follow-up long position about there to be fully allocated, and that made my average entry price around about 112,184, which I'm not crying about. It's not too bad. What it means though is that if we're using this rising support as our as the limit to which as our stop loss, an indicator when the trends change, forget about this. These are these little wicks that try to knock you out. There's a lot of leverage in the market at the moment, and so when we do have these little wicks down here, we have to try and keep our stop way below them, at least in the first instance. It tries to test these little lows. You can see it came down and it got just below that, trying to stop people out before it breaks higher. So now that it's done that, it's on its way back up, which is great. And as we go forward in time, like let's say we go to tomorrow midday, for example, this rising support line will now be at 11 or just under 112, right? Round about midday on Thursday, that rising support now goes through our entry point, which means that we can bring this stop loss all the way up, and this rising support will push the price further and further away. So we can kind of get into a risk-free trade by bringing our stop loss up here. We do not want to do that now because this price can still come down, tag the rising support and go up and stop us out. So we want to go up at the same rate as this ascending support. So we got in, we are now, as you can see, 0.006, which is now double the position size that we had beforehand. I will go through that in a little bit more detail when we look at our risk management. Reason being is because our account may have tripled, but we've only doubled the price there, and that is to reduce our leverage because we were quite highly leveraged on Bitcoin just to get that first trade in. So let's look at drift. We're also long on drift. Let's take a step out. I've cleaned this up just a little bit. I know it still looks a little bit messy, but you can see this is where our triangle was. And we've got the bulls that came in, bought us all the way up to this resistance. Bears came in, sold off, and we had this rising support as the strength of the bears was depleted somewhat. We then broke above this very strong support, went up, tagged the previous lows from here, and also just below the double zeros. You can see there's the double zeros of $1 exactly. And then we were expecting it to come back down, bounce off this support, and then we can go higher. Now, this price over here, we got in at 0.7 on the first trade, but then we wanted to add to that position, right? And again, I'll go through to the risk management now, but either way, we want to add that position to be larger than the previous position. So when we went in, I tried to average in. Let me show you here. And we managed to average in at about 0.71. Before we were 0.7. So I averaged in around about these levels. The second trade that I got into, they were around about these levels here. And it's working out well. Still bouncing off those levels. If we do break down, okay, there's a stop loss. I don't think it'll happen before Wednesday. If it does, we'll cut it loose. But what's interesting on this trade is that you've obviously got this rising support. You got these interim supports over here as well, like these little resistance levels. You can see there's one where it hit there, and it's hit there, and it's hit there, and hit there. So there is this kind of support and resistances, like round about this level. Plus, you got this moving average that's coming up as well. So you could theoretically have a scenario where it goes like, instead of going up, it goes down, tags this line, or tags one of these resistance levels here, and then goes up, right? But then equally, it can also go down, tag this line, and go up. Or, which we wanted to do, is just go up. Sorry, just go straight up. The fact is that we don't really know for sure. It's either way we are confident that it's going to go up, but we need to know what kind of drawdown we can sustain before we knock ourselves out. Again, we're using this rising support level, right? So given that the entry to that support is about 17%, that is a big pullback. I probably would cut that position loose if we start closing below this line here, because I don't want to go the full drawdown. So, I mean, the full 17% down. This is why we have significantly less leverage on this position so that we can withstand a very big pullback, right? So we've been discussing leverage and position sizes. In this scenario, if it's going down just below 20, the maximum amount of leverage you can take would be 5 times, because let's just say it's 20% down, 5 times leverage times 20% equals 100% of your allocation for that trade. Therefore, that is the absolute maximum you can have before being margin called. We don't want to take that to the max, obviously, but that being said, it gives you some kind of rule of thumb on how to trade this. So let's go into the actual trading itself. As we mentioned yesterday, we got up to $30 on our account. You can see over here it's 30.77. However, if we go back to our account size over here, there we go, it's now 30.38. The reason why this is less is for 2 reasons. One is that the fees and slippage has not been taken into account. Every time we took a position to get into Drift and Bitcoin to go long, then we ate a little bit into that 30.77. That's on our, that's over there, right? So that depleted it somewhat. But moreover, remember when I mentioned that we were short when funding rates were positive. We're now long when funding rates are positive. When funding rates are positive, it means there's more demand for long trades than there are short, and therefore we're going to be paying out to hold those positions. We have to pay a servicing fee to have that leverage, whereas beforehand we were receiving that. So this will eat into our account size, but that's okay. Hopefully we're not going to stay in it too long. We want to just get in, take what we can, and get out before we start racking up too many fees. If it starts going weeks, and if you want to go months, that could have a serious dent on your account. We clearly want to avoid that. That's why if you want to do long-term trading positions, I don't advise being in them for too long, because you will be paying overnight interest on those positions. So let's go back to the trade size. We've got 30. Now, as you know, when we went back into what we switched from the short BTC position to a long BTC and a long drift position, what we wanted to do is go in at the same size as the previous tier that we're at. So as our account size goes up, you got to count, we had $10 in there, so we put actually all 10 into BTC at pretty high leverage, to be fair. Then we realized there was an opportunity over in our altcoins. So we split the 10 to go 5-5 so that we can put $5 into Drift. We then went up to the next tier because our account size went to 30.77. Now, when we went back into our trade, when we took our long positions, like I mentioned beforehand, we're only going in at the previous amount, and then we're going to build up our account size. Now, you will notice that on Drift, which is Alt 1, we went in at 35 Drift at 70 cents, because that position size is the same as $5. We also did the same for BTC, and then when we aligned it closer to our new account size, which is in the next tier, which is above 28.50, we then tripled our position over in Drift, which is why we entered at 70. Okay, so we built up our position up to 70 at an average of a spot 7.2, which puts over here our average entry was 0.71 cents, but $0.71, and this trade size is now 105. In terms of Bitcoin, we were short 1003. We went long 0.003. Just remember, keeping it the same size. But when I added to it, I didn't triple the size, I doubled it. And the reason being was because even though we have 3 times or round about 3 times more money to allocate to BTC in the next tier, I only doubled it because our previous leverage was about 70 times leverage to get a position in Bitcoin. But now that we've made some money, we can reduce that somewhat. So by only doubling the position size, even though we got triple the amount of money allocated to that position, it reduced our leverage down to 47.6. Now that is still extraordinarily high. We want to bring that down as well. As you can see, drift is at 5.4. So what we will do is we'll continue to bring this down later on. But this kind of shows how we were using our risk management in order to make sure that we did not increase our position size and we ease ourselves into the new position. Again, it's not about always getting the direction correct. It's more important to make sure that you use the correct risk management. If you keep your eye on the downside, the upside will look after itself. As you can see on our trades on BTC, we got in. Now, because we are, well, it says 60 times there, but I have allocated more to margin over here. So that we're around about 47 times leverage on Bitcoin. We will reduce that further as we go through the next tiers. But we are up 45% on that position. Drift, 5 times leverage. We're up 26%. Yeah, about 26% on that position. Again, we will let those ride all the way up. Now, let's look at the technicals just very quickly. Let me just get rid of these. As we go forward with these videos, I'll try and make them more structured. I know they've been a little bit chaotic. I've been trying to condense a significant amount of information into these videos, and it may have come up a little bit crazy. So hopefully I'll be communicating things a little bit better in a more structured, coherent way as we move forward. But again, this is not just about giving out trade alerts. I could just ping out trade alerts, say buy here, sell that, and leave it at that. But I'm trying to ease everyone into a certain trading method that allows you to be consistently profitable, regardless if the market's going up or down. Because just remember, when Bitcoin peaks and starts going down the mountain again, we can still profit from that because we'll just be shorting Bitcoin. Maybe we'll short 1 or 2 altcoins, but I'll try to be a little bit more careful on that front because they are prone to these larger spikes. So let's have a look. Where are we going with Bitcoin? We can do a number of things, right? Over here is going to bounce off. We're going to go up to this level here. That's giving me our first tier. I personally think it's going to break through, but it could equally go down or kind of coil up here, then go up, or just go straight down or bounce the wrong. Yeah, it can do whatever, but either way, we're not making that decision right now. We're not trying to figure out which direction it's going to go. We're just going to know, what are we going to do when it gets to that level? Well, I'm going to hold off on getting out of my position, but what I might do is if it starts drifting down or respecting this line here, I will cut it and I will go short, but I will go short at the same amount that I'm going up, which is right now, it is at 0.006, which means that, again, if I'm getting this wrong, I'm losing money at the same rate that I made it, so that's okay. Or if it goes through, we can always cut that position and pick it up on the other side. This is a relatively strong support level. So it's more likely it's going to go through here, through this descending resistance. It'll break that, hit its head on this one, go down, test where the descending resistance and ascending support coincide, and then go up like that. And guess what we have? We have another triangle like we had in drift, and we can go through the next level. Boom, boom. Now, I would say that is likely to be the path, but I'm not sure. And it doesn't matter if I'm right or wrong. If we apply the correct trading strategy to this in terms of risk management, we should still be okay. Now, if we take this way of doing things, means we get to the market up here, but yeah, we're getting into timing band for a little bit of a sell-off on our 220 days, right? So what we could have is goes like this, boom, boom, breaks through about there, and then starts making its way about there, and then goes higher. All right. So this way we do get our descent into this timing band and then bounces off where the ascending support line coincides with this horizontal support. The one thing that you've probably noticed is that it is quite difficult to work out these diagonals. The diagonals are great as an indicator. The horizontal resistance support levels are far more reliable. So if you're ever in a scenario where you need to decide, am I using the diagonal or the horizontal, go with the horizontal. They tend to be far stronger. So that is the update for now. I'll keep everyone posted on how we're doing. But again, we are in our positions right now. We are up $5. Well, we're up about $9, which is about 30% on our position. Again, we started from $10. We're trying to make our way up to $10,000. If we can get that right, we will probably start aiming for 10 million. But again, it's about getting the foundation in terms of trading method than, which is more important than getting the direction right. So good luck, traders. Have a great day. And I will follow up with more videos as soon as we have more developments on the markets. All the best. Bye.